Welcome to Seeking Alpha Editors Roundtable. What moved markets this week? The week ending Friday, August 13th, 2021. Yes, Friday the 13th, but it was a quiet week, middle of summer, dog days of summer, subdued volumes, and stocks still managed to make some gains as we record this. S&P and Dow are up for the week. Nasdaq might be down a bit at the time of this recording. Introduce my co-panelists here in no particular order. I am joined by Brad Olison, VP of News. Yes, he's back. Kim Kahn, Senior News Editor, and Stephen Alfer, Managing Editor of Breaking News. I am Nathaniel E. Baker, Senior Editor of Strategic Contributors. I almost gave myself a raise there and a promotion. But anyway, let's start it off with a big picture as we normally do with Kim Kahn.
Well, this week was mostly about inflation. We had the CPI and PPI coming out, type of numbers that are getting kind of enthusiasm that's normally reserved for the payrolls data, just because it's such a hot topic right now and becoming even a political topic. Unfortunately, the numbers didn't clear up the picture that much. Cooler than expected on the retail side, hotter than expected on the wholesale side. If you're in the transitory camp, you like the fact that these hot sectors like used cars and airfares fell sharply. If you're in the persistent inflation camp, you're pretty concerned about owner equivalent rents showing like strong rises. So, the market kind of took it a bit in stride and kind of grinded higher, as you said, like the Dow and S&P doing better in a kind of rising rate environment. And rates were steadily going up as well until today, when they just got a sudden, blindsided by this consumer sentiment number that was out that was much lower than expected.
Interesting. Yeah, I think we'll talk about that a little more later, but let's first get into the winners and losers with Brad. Welcome back, Brad.
Great to be back. And I guess just to kind of continue on Kim's line of reasoning prior to today, he's right. Yes, we were in a rising yields environment. I think that goes alongside the strengthening reflation trade that we've been talking about on this program for quite a few weeks. Cyclicals were big gainers. Obviously, in a rising rate environment, financials also went out. Materials also got a boost. And along with some industrial names as well, we can't forget there was the infrastructure bill that was passed with bipartisan support earlier this week. It seemed to have been overshadowed with a lot of different pieces of news from earnings. For example, value names obviously go along with that. So value and momentum, which are one and the same actually just recently and over the past couple of months. They didn't normally overlap, but they do share a lot of similarities in recent days, and some of the growth names actually kind of suffered. The price action over the past couple of weeks has actually led JP Morgan's Kalanovic to say the bottom has been set for yields and for cyclicals. So if you're an investor in any of those names, then that's something to keep out for. Although who knows what today's picture might do for that forecast. As far as the individual winners and losers, we like I just previously mentioned, we do have that infrastructure bill that led to a lot of strength in names like Jacobs Engineering, which is just a general kind of construction contractor. United Rentals, obviously going to be a beneficiary of construction equipment and other items. Nucor, also a big gainer there. As far as the losers, earnings were a big part of that. Perrigo was down over 10% on their results. They're a generic drug maker. Micron and the chip names were the biggest losers, right? So Micron had a fireside chat earlier this week where they cautioned investors about their supply chain. That prompted a lot of many members of the street to give them a downgrade and also issue some weakness along with the other chip names. So Western Digital, Lam Research, KLA Core rounded up some of the other weaker names just on an individual basis. Now, even though we are talking about the losers, I think it's important to mention that at least as far as macro strategists are concerned, the street is overwhelmingly positive. No surprise, obviously, as we did grind higher, as Kim just mentioned. A lot of bullishness on the street. Credit Suisse raised their S&P earnings forecast, citing a massive underestimation of earnings figures that we saw during this past earnings season. they jumped out to put a $5,000 target on the S&P for 2022. Citigroup is also supportive of EPS growth. They cited some of the more macro factors underlying the economy, notably the senior loan officer survey, which pointed to strong industrial activity and capital expenditures in the private sector, which they say should be supportive of equities. And UBS basically just put a finer point on it, saying the reflation trade is back, and citing mostly in particular that jobs report. But the recent data today, it will be interesting to see how that trickles through the rest of the market over the coming few days.
Yeah, although one could certainly make the point that all the sell side bullishness is a contrarian indicator to be scared.
You would say that, wouldn't you?
I would, yes. Somebody has to. And if it wasn't going to be me, then Stephen. But Stephen, what do you think about all this?
Yeah, I'll try to have some positivity on inflation. And again, I've said before, I'm happy to sit here and trash the Fed. It's enjoyable and all that, but right now I'm still giving them the benefit of the doubt with the transitory language. The core rate of inflation year over year actually slipped a bit in July. It fell to 4.3% from 4.5%. It was better than expectations. So maybe there's some good news ahead. Kind of on that front. Although Kim mentioned that airline fares were down in July according to the CPI, and anybody who's flying knows that's completely farcical. Airline fares are absolutely going through the roof and continue to go through the roof. But what I have my eye on, I haven't talked about Bitcoin in a couple of weeks. Bitcoin suffered a big regulatory setback in Washington. There's some language in the infrastructure bill that's kind of very negative for the cryptocurrency industry, at least in the U.S. There had been hope that the Yellen Treasury would be a little friendlier towards Bitcoin than the Mnuchin Treasury, and that's proving not to be the case. If anything, it's even worse. Clearly, if you're a senior level official in Treasury, or if you're senior level at the SEC, you're either coming from Goldman Sachs or JP Morgan, or you want to return to Goldman Sachs or JP Morgan, or you want to get a job in the future at Goldman Sachs or JP Morgan. And so there's a kind of entrenched bureaucracy, I think, that's going to be difficult, going to give the cryptocurrency industry a hard time.
All right. Okay, let's move on to the next segment of the show, where we discuss our favorite Seeking Alpha articles, news stories, tweets, or other things that caught our interest. Why don't we start with Kim?
I want to talk about AMC, who this past week answered the question, what if you gave an earnings call and no analyst came? Because basically the analysts have waved the white flag on their models for this stock, because it's being driven by the AMC ape army and not in any way by fundamentals. They can't really value it. They'd all have a kind of sell on it, so they've all kind of gone in kind of neutral, and they're not asking questions at the call either. It's the ape army that's asking the question. So I would, as Brad mentioned, we have the transcripts on Seeking Alpha. I would really recommend reading through the earnings call transcript of AMC, because you get questions like, will you make your logo a gorilla? And can we get a GameStop inside an AMC? Which is something actually CEO Adam Aron said he is considering, or trying to do some deal with GameStop. And the only thing he really shut down was a return to drive-in movies. Saying the economics doesn't work there, but overall, it's you get a very different kind of earnings call.
All right, yeah, entertaining times indeed. Brad, what about you?
Notably, the article that I found great was one of Kim's earlier this week, when he highlighted a note from BTIG that noted that the meme craze is altering reality, and they saw a case for going back to 1999, when lots of stocks were divorced from fundamentals. Usually when you have rising volatility, that portends weakness in the coming, near to medium term. However, they say that may not be the case, given where the meme craze has gone. Mainly that as volatility rises, that may actually be a case for stocks to continue to rise, and even further squeeze higher. So even though they were generally, I guess, cautious or at least neutral on stocks, they did see a potential for the S&P to shoot rather quickly higher, given all the issues within the meme fad.
All right.
Don't quote me on the fad. I'm not sure. I don't want to call it a fad. I don't want to attract the ire of any of our listeners. It may be long term. Maybe here to stay.
Maybe. All right, Stephen.
This morning's University of Michigan Consumer Sentiment Survey for August plunged to 70, all against from 82 previously. It was expected to rise a little bit. The survey of future expectations plunged all the way to 65 versus 85 expected. The chief economist from University of Michigan, or whoever does the survey, called it a stunning loss of confidence. And it's as real time of an economic indicator as we have. We were talking about inflation before. Well, that's a July number. This is a number. This is a survey that's taken, within the last few days. So obviously, there's plenty of reasons. The Delta variant was given by their economist. As we're starting to see mask mandates are coming back, and talk about vaccine passports. And I know in Philadelphia, there's a mask mandate has returned, and then you have the inflation numbers, the higher gasoline prices. So it's all kind of going into a real big plunge in consumer sentiment, even as the economy and the stock market continues to kind of chug along.
And for me, I would be remiss if I didn't bring up 1989, mentioned 1999. It's all fun and games till we talk about 1999. Actually, it's all fun and games till we talk about 1929. But I want to bring up 1989 because that is the year that Field of Dreams, the movie, was released in theaters. For some reason, it took Major League Baseball 32 years to come up with this idea to have an actual game in a cornfield in Iowa. It was a big hit, which one would think might be good on the one hand, but I think it's more an indication of just how little imagination the folks in the entertainment industry have these days if they're drawing on things like this. When was the last time we had a new superhero? All of these films are prequels. They did something on Cruella de Vil from that 100 Dalmatians. For God's sake, that was this latest big Disney movie. And Disney, by the way, nobody's mentioned it, beat earnings big time and one of the major winners this week. But add it all up, and one has to question whether this entertainment industry, as it's presently constituted, has staying power.
Well, if you want imagination, there's Free Guy.
What's that?
It's an upcoming movie with Ryan Reynolds. I think it was shelved during the pandemic, but a nice little take on video games and otherwise. I think
I did see that. Yeah.
Just kind of one of these, we talk about the lack of originality. You could argue that's a little original.
Fair enough.
All is not lost.
Maybe not. Yeah, maybe not.
Be a completely cynical program. There needs to be hope.
A bit of a barometer for the movie industry, because it's not coming out on streaming. It's just in theaters, and it's an original concept. No reboot or anything. So I'm guessing no one's going to show up. But
yeah. Anyway, that's where we are this week. Thank you for being with us this Friday the 13th. Hope it was a good week for you, and I hope you have a good weekend. Reminder that you can find this video on the website seekingalpha.com/videos, and the podcast airs on Saturday morning starting at 6:30 a.m. You can get that through the Wall Street Breakfast podcast account on any podcasting software. And with that, we thank you once again for being with us and look forward to speaking to you again next week.